Welcome back. In today's video, we're going to be discussing the Microstrategy millionaires that are going to be minted during this cycle. And yes, it is a strategy to actually play the Microstrategy stock in many different ways. And there's new information and new potential that we're going to see even higher highs in the Microstrategy stock price. And we're going to be discussing some other areas where you can even make money on MicroStrategy without even buying the currently $1,200 or $1,300 stock. So we're going to be discussing that among many other topics, including Forbes has now released the zombie chain top 20. And you're going to be pretty surprised at which cryptos are in that top 20 zombie chains. Marathon Digital is going to be doubling their mining operation and much, much more. As always, this is the Cryptoviser podcast. We talk about everything crypto, blockchain, investing every single day of the year. So make sure you guys are subscribed to the channel. Give the video a free thumbs up because remember, crypto is not free, but thumbs up are always free. Now, as I have been, endlessly talking about for about a year now on this channel, USDC is the key. Regardless if you want to use it, regardless if you do use USDC, USDC is being implemented around the globe. And now we are seeing USDC not just on Solana, it's going to be integrated in, I think, into Polygon, Ethereum, and Solana to begin with. And Stripe is supporting global stablecoin payments this summer. Transactions will instantly settle and automatically convert to fiat for customers. Let's watch this video and listen to what this they say. I'm going to be playing this at 1.5 speed. Typically, you guys know we just play things a little bit faster on this channel. Let's listen in.
So this is a little preview. Patrick's not the only one who can leak things. This is the Stripe checkout you know and love, and it's got all the cool functionality. Like, again, a big one for us is localization, where it looks different. You see here, depending on where the customer is coming from, it'll give them that really nice, high-converting, localized experience.
This is Stripe.
Over here on the right, we can pay with crypto. So we'll tap pay here. We'll go to a confirmation screen. And so, did I actually? Oh, we're on Hyperion, the ghost of Christmas past. This is our confirmation page. We passed in the email address for the checkout. Here we're selecting what chain we want to pay with. We're going to pay with Solana. Here we're selecting what wallet we want to use. Which is Coinbase wallet or MetaMask. I'm going to use Phantom for the purposes of this demo. So when I pay here, it's going to bring up some UI from Phantom, which is the crypto wallet that we're using. So this is the Phantom UI here. This is not Stripe UI. And you see here we're confirming. We're going to pay with Solana. The network fee, very cheap. As we discussed, network fee is coming down $99. Now again, you're probably used to a crypto transaction. You're expecting me to bring out another guest here, and we'll do a 8-minute conversation while we wait for the transaction to clear. But that is old crypto. You ready for the new crypto world? You have to look very closely and not blink. You ready? Oh, that tap. That's it. We're done. And that confirmation page was not like this has been entered in a queue. We're going to now go do something. It has now been posted to the blockchain already. And so if I go into my Phantom wallet here and go into the Explorer, you see here, it's sent at 9:58 today. We can view on the Solana Explorer. This is, I think the Explorer just loading is on the blockchain. Here we go. This is, so you can go to this URL yourself if you are eagle-eyed and see this is a real posted transaction to the Solana chain. Similarly, we can view it in the Stripe dashboard. So if we click in here to our 9:58 a.m. payments, you see here, we made a payment with crypto. And again, Stripe handles everything for you. You just got $98 into your bank account. But that is crypto coming back to Stripe.
So Stripe is now integrating crypto. They're going to be having USDC on the network, and they're also going to be integrating with Polygon and Ethereum. So as I say, USDC is key. The cryptos and the blockchains, including Internet Computer, including Cardano and XRP that don't have USDC, are going to have some issues this cycle, kind of maintaining top 10, top 15 positions without USDC natively integrated. So we'll see what happens with that. Meanwhile, Forbes has now launched the crypto billion-dollar zombies. Now, this is causing a lot of uproar in the crypto ecosystem, and effectively, they talk a little bit about this, what's going on in the crypto space, but essentially they talk about which cryptos are considered the top zombie chains, and they talk a little bit about Ripple here. Then they also talk about other cryptos, including, it says zombie blockchains mostly fall into two categories. They're either spin-offs of earlier blockchains like Bitcoin or Ethereum, or direct competitors to them. Spin-offs, also known as hard fork zombies, include, according to Forbes, not the Cryptoviser, is Bitcoin Cash, Litecoin, Monero, Bitcoin SV, and Ethereum Classic. These 5 blockchains collectively trade at valuations of $23 billion today. And so people are saying that these are zombie chains. And then this is their graphic. It says good for nothing blockchains. These 20 blockchains below command a total market cap of more than $100 billion, despite the fact that they are unproven and have little utility other than speculative crypto trading. Most have treasuries brimming with millions, but they answer to neither shareholders nor regulators. And so this is quite the report over from Forbes. And so these are the top 20 zombie chains according to Forbes. They say XRP. They have comments here saying it's a payment platform that has yet to challenge Swift, now threatened by stablecoins. Now, in my view, I do agree. I do think that XRP has been held back significantly. I think the XRP sales by Ripple is also a huge overhang for the ecosystem, which is not great. I'm not saying that Ripple is not going to be a business and that XRP is not going to be used. I just don't think that it's going to be used in the original way that people thought in terms of global payments and all of this. Because, yes, as we just covered, USDC has already leapfrogged XRP, it's leapfrog Cardano, leapfrog a lot of these blockchains that said that they were going to solve all of that for the world. Now, personally, I believe that there needs to be competition in this ecosystem. So there needs to be ecosystems that challenge each other. And some ecosystems like USDC may be huge today, but maybe in 5 years they won't be. I mean, go look at the top 10 cryptos. A lot of them that were there 5 years ago are not there today, right? And so these things will change, but it depends on what these projects are actually doing to change the not just the narrative, but the users of these ecosystems. And then second, they have Cardano listed. You guys know how I feel about Cardano. We don't even really mention Cardano at all on this channel anymore because it actually negatively affects our channel because of the lack of development, right? And um the what is the word for it? Vileness that the community shows to people who give any critiques, whether it's a venture capitalist, a YouTuber, whoever else. I mean, it's so bad for the ecosystem, and they don't have USDC implemented, barely any smart contracts, very little usage. I mean, if you go to the Cardano Explorer when I'm recording this video, end of April, early May 2024, the network activity has been decreasing over the past 3 months, and it should be increasing, but it's not because of other ecosystems like Solana, Polygon, and Ethereum that are just eating everything away. They're eating adoption up, and other ecosystems are like, well, we're going to get there. It's like, when? When are you going to get there? Like, if you're not there now, you're not going to be there in 5 years. Bitcoin Cash. Listen, this was a fork of Bitcoin, so was Litecoin. We'll talk about these two together. I think that there's still a need for them because they are proof of work blockchains, and there's a very few blockchains left that are proof of work. And so having that kind of security on a chain is important to have, again, competition and having different networks for different things. But I do think that what we are seeing is Bitcoin, Cash, and Litecoin kind of losing some relevance here as we move forward. I think in the longer term, they're going to be okay because, as I've explained to you, what we see is new projects popping up and everybody's all excited about it. And then things can happen, right? We saw Terra Luna, huge, and then it collapsed. FTT token, huge, and then it collapsed. And so these ecosystems that we're seeing pop up and taking over where these blockchains like Bitcoin Cash and Litecoin used to be in the top 10, top 15, and they no longer are. Some of these blockchains may not survive this cycle, may not do very well. And so that puts more people back to Bitcoin, back to Ethereum, back to Litecoin, back to Bitcoin Cash, these blockchains that have proven history and no major issues, right? And then it brings Internet Computer, which is interesting. It says created in 2021 to disrupt Amazon Web Service and Google Cloud, minimal usage. Now, I would agree there is minimal usage. We know based on Internet Computer, their launch and the price going from 800 to basically $3 or whatever it was. I mean, a lot of that was manipulation from FTX, FTT. So I don't think that Internet Computer had a good launch. With that said, this is the cycle that Internet Computer has to succeed. If it doesn't succeed by the end of this cycle in terms of mainstream adoption and more usage and people actually using the chain and building the chain, which I believe a lot of that is going to be from the AI perspective and also from interoperability perspective. And this is where Internet Computer does need to tweak a little bit. But if they don't tweak a little bit by the end of the cycle, Yeah, I would maybe put it in this list of zombie chains, but not necessarily now. Ethereum Classic, same kind of thing with Bitcoin Cash and Litecoin. Stellar, you guys know, I was a big proponent of Stellar in the bear market because I believe that what they're doing on a global scale from a transaction processing and cross-border payments and all of that, and using USDC was huge. But again, there has been zero clarity how XLM has to do with any of this because Stellar's blockchain doesn't need XLM, similar to how Ripple's blockchain doesn't need XRP. And so I sold all of my Stellar in the last 6 months or so, and I probably will never buy it again because I do not see the value in it, and I don't see the Stellar Development Foundation doing anything to even address over the last 3 years any implementation of XLM or how XLM is being used at all. They just don't discuss it at all. And to me, that says they're not even focused on XLM, which we also know that they're probably not because they don't even hold any XLM because they burned it all back in 2019. Anyway, some of these other ones, I don't really know enough about Stacks. I don't know anything about it. I think it's a fairly new blockchain. Caspa, yeah, this has been around for a while. Theta's been around for a while. Phantom's been around for a while. Monero's been around for a while. Arweave, Algorand, Flow, Multiverse, X, Bitcoin SV, the Mina protocol, Tezos, and EOS. Listen, I think Tezos still has a chance because it has so much venture capital and investor money behind it from the previous cycle. But similar to what we see with that doesn't necessarily mean anything, but it could become like a Solana where all of that venture capital money has been building over the last few years, and now we're going to see implementations as we enter the bull market. But as I said, I'm recording this video after the Bitcoin halving. So anything that we don't already know that these ecosystems are at least doing or preparing for, unless they have some thing that is going to like melt faces, some announcement like, we're partnering with SpaceX or something like that. I really don't think that any of these chains are going to have a chance, but we will see. We will see. I do think some of these in here do have opportunity to move up. Tezos, maybe Algorand, but I don't really know enough about the rest of them. There's over 2,000, or I think on CoinMarketCap, 2.4 million different cryptocurrencies that they follow. And really most of the money and most of the flow is going to be in the top 15, top 20, maybe even into the top 100. That's what I'm talking about. That's what I'm investing. So whether they call it a zombie chain or not, that doesn't mean that you're not going to be able to make money on it. So I'll leave you guys with that. And so, yeah, people are freaking out about it on X, saying these are layer ones with high valuation but are unproven, have little utility other than speculative crypto trading. Well, we'll see about that. Anyway, in other areas where you can make money, we've been talking about the Bitcoin mining companies, and Marathon Bitcoin mining increases their 2024 hash rate target to 50 exahashes per second. So effectively, they're saying by the end of this year, they want to see a 100% increase by the end of the year to 50 exahashes. Whether they're going to be able to do this or not, I don't know. Marathon is the largest publicly traded Bitcoin mining company, I believe, in the world, definitely in the United States, $5.26 billion. Personally, I do think that the Bitcoin mining companies are going to do extremely, extremely well this cycle. But this is the highest market cap one. If it does double its hash rate, you could say, well, it's just going to be back to where it was at the beginning of the year because the Bitcoin halving lowered the rewards. But if they're doubling their hash rate, they should be able to double their mining operation effectively, or somewhat close to that. And then they can double what they were making. So they're really making the same amount if the price doesn't move. But if the price moves, obviously they're going to make a lot more. But I'm personally more interested in some of the smaller market cap crypto mining companies. We've been talking about Griffin Mining. I think that's how they want it pronounced. Griffin Mining. This is a $58 million stock right now with a lot of growth potential. SDIG. There's a lot of people who are not that interested in SDIG because I believe they're taking out debt and some other financial stuff. There's also Grid Infrastructure, which is another NASDAQ traded company, and this one is $50 million. And then there's some in the $100 million range that are close to $1 billion, but not yet there. Hut 8, $1.1 billion, but that's in Canadian, so it's about $900 million. You have TerraWolf, which is another interesting one. Bitfarms. These are the ones that I'm interested because they are also, most of them are continuing to expand their operations and have plans for the future. And they have, I think, undervalued market caps. So I do think that if you are well positioned, and again, diversify, this is not financial advice, do your own research. This is just my opinion. Personally, I'm putting my mouth my money where my mouth is. I mean, this is probably outside of crypto, like just in like a single asset or single category. Like this is probably like the largest holdings that I have in Bitcoin mining companies because I do think that based on historical charts, I mean, after the Bitcoin halving, in the next year they're going higher. Like there's no reason why I would believe that they're not going higher. And I don't even think that any of this is even priced in. People are like, oh, Cryptoviser, the Bitcoin miner companies, these are this is priced in. It's like, is it really? I mean, is it really? Bitfarms, look at it. Like from the low, we're basically double off the low from November. If we look at, let's pull up TerraWolf, right? TerraWolf, if we pull up the year, we're basically like almost at yearly lows, a little bit higher than yearly low of 90 cents, but still pretty low. And if you look at the trend, right, the trend was down in the last year, but now you got this nice cup and handle pattern boom. And we didn't really follow through on that cup and handle pattern. Maybe right here was the handle and then it went higher. But as you guys see, we're getting higher lows over the last few months. And I think this is going to continue to trend higher. I mean, I could be wrong on this. So make sure you guys do your own research. But that brings us to MicroStrategy, which is another very interesting play for the markets. Now, MicroStrategy has done, I mean, incredibly this year. When I'm recording this video, I don't think I even hold any MicroStrategy stock directly. I sold most of it into this huge pump that we've seen, right? From the October lows effectively of about $350. We'll just say like 350, right? We went all the way up to $2,000. So we go $2,000. Let me pull up the calculator. 2,000. We divide it by 350. That is a almost 6x in just a few months. And this was all before the halving. And so it looks like we locally peaked out at about $2,000 and we've come down to 1,200 and it's starting to create a floor. Now, a few days is not creating a floor. End of April, probably by the time you're watching this video, the MicroStrategy earnings report came out. But what's really important that we focus on is what is happening next. MicroStrategy could merit an S&P 500 inclusion if it adopts a new accounting rules. And effectively, these new accounting rules will change the way that they basically say like where their profits or losses are based on their holdings of Bitcoin. So essentially, forget about the earnings because I'm not as concerned about the earnings, but their corporate strategy is to continue to buy Bitcoin. We know that. This new accounting guidance allows companies that hold digital assets on their balance sheet to measure them at fair value, meaning like the market value, and record changes in fair value in net income in each reporting period. The new rules become effective in January of 2025, but early adoption of the standard is allowed. The impact of doing this in MicroStrategy's reported earnings per share would be massive. According to the company's 2023 reporting, estimating their early adoption of Bitcoin would increase at the beginning of the year, retaining early earnings balance by around $3.1 billion, meaning that's what they're making in profit on their Bitcoin holdings. Now, they wouldn't have been able to do this last cycle because they were basically even on their Bitcoin holdings. But now, because Bitcoin price is above what their dollar cost average is, they're in the green. So if they adopt, which I would imagine they're adopting this new accounting standard, this is going to allow them to show even more profit based on their Bitcoin holdings go forward, as long as the price is over their dollar cost average, which is around, I think, the $30,000 range. And so this would then allow them to meet all their criteria for the S&P 500, basically the Wall Street stock market index. The company is based in the US. Its shares are highly liquid. These are the requirements to get listed. 50% of their outstanding shares are available for trading, and their market cap is higher than $18 billion. For them to be considered a stock in the S&P 500, by the way, they're on the stock market, but the S&P 500 is the index that everybody follows. right? So the S&P is 500 of the top performing companies in the US, and that this is like the indexes along with NASDAQ, Dow Jones, the Russell, etc. And so they would have to have positive earnings in their most recent quarter. Benchmark, an analyst company, notes that MicroStrategy has reported losses in 10 of the past 14 quarters, but early adoption of these new accounting standards mean the company could meet this criteria of being in profit. And I think that they will, or positive earnings. I think that they will because, again, if they use the new accounting, it includes Bitcoin holdings, and Bitcoin holdings are basically in the green. So this would actually be really good. And then we may see the price moving higher just based on the speculation that it's going to be included in the S&P 500, because then you have every company that is buying into the S&P 500 through other indices, or I should say other ETFs that track the movement of the S&P 500. All of those companies are going to keep buying the stock because they have to hold it because the S&P holds it. And so that will continue to push the price higher, even though we've seen Michael Saylor selling about $300 million plus of his stock over the past 3 months, right? He owns zero stock in MicroStrategy. He's selling it all. I imagine he's selling it all and he's going to be buying Bitcoin for his personal stash. Because as we know, Michael Saylor is like the ultimate market CEO, right? He's the CEO that everybody wants if you're an investor. And he was recently on this podcast. I don't know if this is the podcast or not, but effectively he's talking about like why people like MicroStrategy, why people like to trade with MicroStrategy and all the derivatives that are being built on MicroStrategy. He even mentions Yield Max, the MSTY, covered call option ETF, which we're going to talk about a little bit more in depth in just a few minutes, because again, MicroStrategy has the potential to mint millionaires, whether it's directly through their stock or it's through the derivatives or through other ways of trading what MicroStrategy is doing. So let's listen a little bit to what Michael Saylor says about why people are choosing MicroStrategy and why this is such a unique opportunity in investing. And it is high risk, obviously. It's very high risk. That's why I always say do your own research, make sure you understand the risks involved, make sure you know what you're doing. Because I'm just telling you my investment ideas, strategies, thesis, and opinion, and I could be wrong. So never make investment choices based on what I say. Do your own research. Let's listen to what Michael Saylor says here. And before we do, don't forget to give this video a free thumbs up. Hit that subscribe button down below. That way you never miss a new video. We upload every single day of the year since 2018. And I'm playing this in 1.5 speed, so it's going to get a little bit fast.
The ETFs got approved. And people thought, oh, well, when the ETFs are approved, it may not be good for you because you're trading at a premium.
They're talking about Bitcoin ETFs.
But in fact, the opposite was true because we have a lot of Bitcoin and we're an operating company. So what you can do, or what MicroStrategy can do that an ETF can't do, is you can borrow against our stock. It's marginable. We can leverage the stock. You can option the stock. We have options, puts and calls. You can short via puts. You can go long via calls. And you can buy our debt or trade it, and we can sell the debt. So all the other spot ETFs are not marginable. They have no options, and they can't issue equity capital via shelf registration.
And this is true. Currently, the Bitcoin ETFs, including BlackRock's, have no options or futures, right? It's strictly just the product. I imagine in due time they will have those other products attached to it, but those are not like MicroStrategy is more of a leveraged play, right? Obviously, leverage has more risk, but it also could potentially have higher reward. But yeah, MicroStrategy is a leverage play because you're betting on what this company is going to do with their Bitcoin, with their profits, with their debt. And they are taking on a lot of debt, right? A lot of debt, billions and billions of dollars. And they're putting it all into this asset that basically is anti-debt, which is Bitcoin, right? It's very interesting the way that they're using debt to put that money into anti-debt solution that hopefully is going to go up in price and then wipe out that previous debt that they took out to acquire that asset, which is Bitcoin. It's a very interesting strategy, and if it plays out well, obviously it is playing out well. Like I said, Michael Saylor has sold over $300 million worth of MicroStrategy stock since the beginning of the year of his personal stash. And he's probably going to be buying Bitcoin with that too, right? So he made all this money from creating this strategy within his company and making the company, profitable quarter over quarter for the most part, right? Revenues may not be good, but people are still making money within that. It's just a very interesting aspect of what MicroStrategy is doing. Let's continue listening in.
They really can't trade at a premium. They get basically arbitrage back to net asset value, and they can't issue convertible debt. Now, why would you want to issue convertible debt?
These are the Bitcoin ETFs.
Because if you're a convertible arbitrager, you want to find a company with three things. You want volatility, massive volatility. You want liquidity. You want to be able to trade in the spot market in order to hedge out your exposure. And you want durability or transparency. You want to know that the company as a going concern is going to continue. So if you think about companies like GameStop, they were very volatile and liquid, but that trade doesn't go on for years and years. And with our company, we're basically holding a bunch of Bitcoin. Everybody knows we stand for Bitcoin. Everybody knows we're going to buy more Bitcoin. Everybody knows we're not going to sell the Bitcoin. So we have credibility, and we're durable. The S&P index has a volatility of about 12. Gold is 10. Real estate, 18. Apple, 20, 22. Tesla, 45. Bitcoin, 75. MicroStrategy is levered Bitcoin with a passionate shareholder base, 120 to 140, 150 something, but more than 100.
Okay.
And by the way, to what he's talking about, I really did think that MicroStrategy would sell at some point up to this date, and they haven't. And I really don't think that they plan on doing it. Now, understanding, as we're hearing, his entire synopsis of, using the company and then using all of these other areas to trade what the company is doing is all an area to make money. And this is so they don't even need to sell the Bitcoin because they can make money just holding the Bitcoin, which no other company has done thus yet. I mean, besides MicroStrategy, a few companies hold Bitcoin in their balance sheet, but they're not doing what MicroStrategy is doing.
Okay, so if you know the Black-Scholes equation, if you plug volatility in the Black-Scholes equation, it makes the option more valuable. Nobody wants to buy an option that has low volatility. So we stumbled on a very interesting opportunity because we're an operating company that can issue convertible debt, and we were able to appeal to a variety of investment classes. For example, one class of investors is public company investors. They want Bitcoin exposure. They can't buy Bitcoin. They can't buy the Bitcoin ETF. They can buy a company that does something with Bitcoin. It's like I can buy a gold miner, but I can't buy the gold and I can't buy the gold ETF.
Yes.
So they have billions of dollars of capital and they have to invest in an operating company. And we became the most notable, premier, and the most transparent company. With MicroStrategy, we're going to buy Bitcoin, keep it, and try to accrete more Bitcoin per share. There's another class of investors, the Bitcoin maximalists. They love Bitcoin, but they have money in their 401k. And they can't buy Bitcoin with their 401k, but they can buy a stock like MicroStrategy. Now, why would they like us? Well, would you like to be able to borrow money for 7 years for no interest
Exactly.
and buy
It's
Bitcoin?
like free money.
You would like to, but you can't.
Yes.
But we can. So if you like that prospect, they would buy our stock because they feel like they're along for the ride, right? They're getting advantage of our ability to get cheap capital to buy Bitcoin.
This is very interesting, guys, because this is exactly what we've been talking about. I have been saying since the bear market, it's a very unique opportunity, since $100 MicroStrategy, since $200 MicroStrategy, right? We went from effectively $160 to $1,600 in just 6 months. It's a 10x. It actually went more than 10x. But that number, 10x, even $200 to $2,000 in 6 months, that's a 10x. And you don't get this in Apple. You don't get this in Google, in Tesla. Like, you don't get these kind of moves. And so people who are looking at their 401ks and saying, like, I want that Bitcoin exposure, but I don't want to have my Bitcoin in some, potentially non-regulated 401k IRA for Bitcoin, right? You want it in a safe investment because you don't know how long till you retire, maybe a long time. And so you want to make sure that that money is safe. And so, within a 401k, you can trade MicroStrategy. It has more volatility than the Bitcoin ETFs. It's probably going to have more volatility than a lot of cryptos that we see out here into the bull cycle. But this next part is really interesting because this is really where he starts to talk about the yield max ETFs, which I think are a great opportunity if you have a higher risk tolerance, right? Like I do. I have a higher risk tolerance, so I'm looking at what yield max is paying out in most of their ETFs. No other ETFs are even coming close. Now, this is not saying that it's going to continue forever because very, very risky, especially in single asset ETF issuers. But let's listen to what Michael Saylor says about this.
Another reason is, would you like to borrow against Bitcoin from your bank? Well, you can't because the bank doesn't take the Bitcoin as collateral, but MicroStrategy stock is marginable. So you could pledge it as collateral and borrow it at SOFR plus 50 or 100 basis points. So that way you get to keep your Bitcoin and take a pretty cheap margin loan against it. So some people like that. A third class of investors want volatility. There's something called MSTY. It's like an ETF that sells MicroStrategy volatility.
Okay.
It generates 100% plus dividend yield. Okay, so if you just
Nice.
sell the calls, you could own the Bitcoin and sell covered calls out of the money or in the money, and then you generate some yield. So some people like
Is it
that.
issued by you or
No,
by
we
someone
don't-
else?
No, it's somebody else.
Somebody else. Okay.
Other people. But the reason that they do it against us is because we have Bitcoin and we have options. There are billions. There's like $30-40 billion of open interest in the MicroStrategy option market. Well, there are no options on the spot ETFs, you see.
So yes, that brings us to Yield Max MSTY. So effectively, the way that MSTY works is they have a covered call strategy. We're not going to go through all of that in today's video. Do some research on covered call strategies if you're not sure, or go to MicroStrategy's X page on Twitter, and you can see some of their posts about what their covered call strategy is. But effectively, they are selling covered calls on the market, and they're making the premium. So if you go on the options market and you go to buy a call option on MicroStrategy, somebody's selling you that contract. And so they're making whatever you're paying for that contract, and they're taking the risk that they're going to have to sell you or buy those shares, depending on whether you're doing a call or a put. And so using that premium and just taking the money and selling these call options that are covered and short dated, you're basically trading the volatility of MicroStrategy. And what this ETF, what really Yield Max ETFs, they have a ton of them. And a lot of them pay out fairly decently. I'm not going to say that they're all great or that they're all consistent, because they're not. But a lot of people in the stock market expect between 7 and 15% per year, typically below 10% per year of average yield from most dividends, right? People who hold specific stocks for the dividend, they're only making about 7% for the year. A lot of these Yield Max ETFs are giving like 3 to 5%, I should say, 3 to 5% per month. And so when Michael Saylor just said they have a very high distribution rate, they do, but this is only based on 1 month because the MSTY ETF just began in February and they had their first distribution in April. But that distribution was $4 per share. And the price in April of MSTY was about $40. So if you do the math on that, that's about 10%, right? So effectively, if you were holding in April or in end of March, early April, you would have gotten a 10% yield for the month. Now, is that going to hold up or not? I don't know. But this is basically how the Yield Max ETFs operate. And so he was talking about this MicroStrategy ETF, right? So I mean, effectively, somebody who's holding, let's say, $100,000 to get dividends in a regular ETF, they're probably getting $7,000 a year, right? 7%. But if they're in MSTY, if the dividend holds up, it's going to be about $10,000 a month, not $10,000 a year. But whether it's actually going to hold up to that number, I don't know. I think most of their ETFs are, their yearly yield is somewhere like in the 50 to 100% range. You can see this distribution rate. The Tesla one, 54% yearly. The ARK one, 49%. The NVIDIA one, 124%. The Coinbase one, 137%. This is for a year. AMD, 78%. So these are much higher than most other ETFs that you see out there. Anyway, investors are bracing for 5% treasury yields as U.S. inflation worries mount. Again, is this going to affect Bitcoin? The Treasury buying debt, the Federal Reserve buying debt? Who knows? We will have to wait and see. And by the way, there is what they call an Asian MicroStrategy called MetaPlanet has bought 1 billion yen worth of Bitcoin as they pledged. So Japanese public company MetaPlanet announced the purchase of 1 billion yen or $6 million worth of Bitcoin, adopting Bitcoin as a treasury reserve asset. So now we have MicroStrategy, we got this MetaPlanet, and this is just a few companies that we know about. And I'm sure as we go through this cycle, we're going to hear about more companies, more countries buying Bitcoin, put it on their balance sheet. just really using it as a way to offset some of the inflation. Because in my view, I think this is why I pulled up this article, right? As treasury yields are going up and inflation is people are worried about, like, who's buying all this debt? The reason that the yield is going up is because people are not buying the debt. So the yield goes up to incentivize people to buy the debt. But who's buying the debt? Who is buying the debt? I don't know that it's possible that it's anybody but the Federal Reserve, because look, China is dumping US treasuries and buying gold. So China is selling the debt. They don't want the debt, meaning they're not going to buy any more of the US debt. US keeps printing and printing and printing. How do they do this if nobody's buying the debt, right? China offloaded $22 billion worth of US treasuries in February. According to the latest data, that dropped their total holdings to $775 billion. So they have less than $1 trillion of our debt. They're, I think, the largest GDP in the world. So they're dumping the debt. Who is holding the debt? And this is as the BRICS nations are creating their own currency, and it's going to threaten the dollar. And I don't think that most Americans understand what the implications of that is. They're dumping their bags. We're left holding the bag. That makes our currency inflate. And when that happens, crypto goes much higher. So we'll see what happens. Hopefully you guys enjoyed today's video. Don't forget to give the video a free thumbs up. Hit that subscribe button. That way you never miss a new video. And I'll see you tomorrow. Crypto on.